Welcome to TQ Talks, where taxes meet planning. Here's your host, Craig White.
Welcome back to another episode of TQ Talks. I'm your host, Craig White, and as promised, I'm going to address one of the most talked about headlines from the One Big Beautiful Bill. We spoke about it, or I spoke about it last week, and told you we'd discuss it. It is the no tax on tips. Boy, I want to be very clear about that. That phrase is so misleading, and it is frustrating, not only to me, but I'm sure to everyone else who's trying to figure out what's going on. The law did not make tips tax-free, right? What it did was create a new deduction with limits and income thresholds and some unanswered questions, literally for probably everybody listening. You know, what exactly is going on with this whole tax on tips thing? So let's walk through what the rule actually says, how it's claimed, and who this really applies to. First and foremost, under the One Big Beautiful Bill, they, meaning Congress, created a federal income tax deduction for qualified tip income. Makes total sense, right? You work a job, you get paid in tips. They're saying, listen, we're going to give you a tax break. We're going to help you with that deduction. But what's going on is that the deduction is claimed when you file your tax return. It's not a payroll change, right? It does not change how tips are reported during the year. And that's part of the confusion that I'm constantly bombarded with, where people are asking what's going on. The tips are still income. I repeat that. Tips are still income. The benefit happens on the actual tax return, not on your paycheck, which I honestly understand, right? Because if you tell me no tips on, on no taxes on tips, I'm going to assume I'm not getting taxed on the tip. But we're going to go into some of the details because, like I said, it's something that people are asking for, and we really want to, or I really, really want to address that. So for tips to qualify, there are a few things that have to be true. The tips must be voluntary payments from customers. Voluntary. Y'all can't strong arm people out here and then talking about you got the tip. They must be earned in an occupation where tipping is customary and expected. I don't think we need to, or I need to go over what those are. You guys, you have a basic understanding of what a tipping business or industry is, especially in South Florida, where tourism is one of the major attractions. It's a heavy tipping industry area, right? We have a lot of restaurants, we have a lot of gig workers, and a lot of people are earning income, and then of course the minimum wage is lower, and then they turn around and make a lot of their money through tips. So it should be pretty simple to understand. The last part of it is that they must be reported. Yep, that's right. Either through the payroll, right, or by the employee. So if the tips aren't reported, they don't qualify for the deduction. I need to make sure I repeat that last part, right? It's either through payroll or by the employee, right? So you can report your own tips. If your employer hasn't done so because it's not on any form, then you're going to do it. And we're going to address that. I'm going to address that for you later on in the podcast. So this deduction is not unlimited. There's always going to be some kind of cap to almost everything that the IRS does, and that's fine, right? I have to make sense. The maximum deduction is $25,000 per year in qualified tips. It does phase out. And these numbers are almost always the same. That's one thing that's been very consistent about the IRS. It's usually a modified adjusted gross income of $150,000, $150K for single people. You double that down for married, so $300K. So as the income goes up, the deduction phases out all the way relatively to nothing at all, which is not a big deal, right? So those numbers for the first time, I'm going to say, make total sense because tipping usually is not a high income earned profession. Now, there are places, in my head, I'm thinking steakhouses or high-end restaurants where you do have people who are earning tips and definitely making over 100,000 K per year with no problem, right? But for the rest of the world, right, the rest of us, if you're working in a tipping industry, it's really designed, and this bill is designed to benefit working and middle class, income earners, not really high income professionals. So it is what it is, and that's something that makes total sense, and I think that most of us would agree with. Now, tips are still subject to payroll taxes. Social Security, Medicare, right? The employers still have to withhold your taxes because that's something people were saying, oh, well, that means that. No, no, no. It's still getting withheld. They're reported on the W-2 just like they were before. So the paycheck doesn't increase automatically, right? Because nothing has changed. And you don't show tax-free tips, right? It's not something where magically the paycheck changes and all of a sudden money shows up out of nowhere. Everything remains status quo. The norm is still the norm, right? So nothing about the paychecks changes just because the deduction exists. And that's something I wanted to make sure that you understand and are clear about because there seems to be a misunderstanding, again, understandably so, that because this thing says no tax on tips, everybody gets excited and, oh, the money's going to be, it's not, no, not at all. You still got to file. So the W-2 is going to end up coming into us, meaning myself and my business partners. We're going to work on it. That's what happens. You start working on the taxes. The tips remain included in the wages, and then separately on another form, right, those are removed, and depending on how many tips, or how much, I should say, not how many, but how much you have that qualifies, it ends up helping to break down or remove that from your taxable income, which is huge, right? It's a great thing. This also means that some W-2s may show up and be really helpful. The employer does a great job. The payroll system already has this stuff separated. Fantastic. But a lot of them won't. That means you as a taxpayer may need to have the pay stubs still available to you, especially your last pay stub. I think we run over that in one of our last posts. Your tips reported, because that's another thing, we're going to talk about. Overtime is another part we're going to talk about another time. But tips, definitely you want to keep track of. You just want to know in case you have to do the calculation for yourself. And there's another thing that we talked about, or we didn't talk about, but yeah, myself, Patrick, and Sebastian spoke about on something else. We talked about those who were specified trade or business. And guys, that's like health, law, accounting, I can't ever remember this, performing arts, I think financials in there because we were laughing about that, and like consulting. And they are supposed to not qualify. Those industries are supposed to not qualify for this. But the IRS did come out and say that for 2025, meaning you're filing your taxes now because it's a year behind, they're not even worrying about it really, right? I'm summarizing. They're pretty much saying we're going to really be sticklers about it in 2026, but until we make some changes, those people in those businesses, or those specified service trader businesses, is what I should say, the SSTBs, they may still qualify for the no tax on tip deduction, which is a big deal, right? So as of now, there's no full guidance of it. You can, I guess I shouldn't say that. But you can take advantage of the fact that they haven't had a defined yes or no or guideline on it, and you still qualify. So if you're one of those people in those industries and all other rules apply, right? You have to still follow all the other checklists, then you are still able to take advantage of it. And again, I'm in Florida, right? So in Florida, this rule gets a lot of attention because of how many tipped wage industries we have. We spoke about it before, restaurants, hospitality, service workers, but it's not a Florida-based rule. It's a federal income tax deduction. We just happen in Florida to hear a lot about it, and again, understandably so. So the value of this deduction depends on your income level, your filing status, if it's going to phase out or not, and what tips are documented, right? This one is going to reward the compliance factor. Are you following all the rules, or are you trying to shortcut? If you're shortcutting, it's not going to help you. So hopefully your employer is doing a good job of keeping track of this information and reporting it on your W-2, or you are holding on to information so that you can do it yourself. And there are forms you can use. I think it's like a 4070 to calculate, or 4137. I'm sure, we'll go over that, or I'll address that on one of our social media posts. So again, the takeaway is simple. There's no tax on tips, but that does not mean taxes on tips mean free money all the way around. There's a deduction that you're eligible for. It does have limits. It does have threshold. You do have to file a tax return in order to take advantage of it, and documentation is required. Thank you for joining us today, or joining me today. Still working on the individual thing, man. I'm used to my boys being here, but it is what it is. Next episode, we'll talk about another headline that is, again, just frustrating, and everyone's trying to understand it, including the IRS themselves, because the information is just misleading all the way around. And that's the no tax on overtime rule, and why that one works very differently. And Lord knows the IRS has been flipping and flopping trying to give people information on that. So that's the end of the TQ Talks episode. We really appreciate you listening in. Please make sure you like, follow, share, and find us on wherever you get your podcasts. We'll see, or I'll talk to you next time. Have a great day. Bye-bye.
Thank you for listening to TQ Talks. If you enjoyed the show, please rate and recommend on iTunes, SoundCloud, or wherever you get your podcasts. You can also get more information at tqfinancials.com.